Hello everyone and welcome to Edison TV. My name is Victoria Czernik. I'm an investment director at Edison Group, and my guest today is Ross Driver, who is the portfolio co-manager of Foresight Solar Fund. Ross is a renewable energy specialist and he joined the company in October last year. Welcome, Ross. Let's start from your background, I suppose. Why did you choose to join Foresight Group, and how's your previous experience been helping you, and how's it going?
Sure. Probably might be worth giving a bit of background on why Foresight and why renewables in a start. So I think I'm just coming up now to sort of been in the industry for about 17 years. I started my career back in 2005 at KPMG. I was a financial advisor, advising around infrastructure, and then latterly into renewables, as I say, the early stage of it. I then spent 3 years at another investor group called John Lang, where I actually was around at the time that they first started investing in solar, wind, and at the time that the JLEN fund was born, that I now have come back to work with again. And following that, spent the last 8 years at another company called Infrared Capital Partners, where I was working on development stage infrastructure and renewables. So was looking for a new challenge, looking for a bit of a different move, really wanted to focus on renewables and clean energy. And I think Foresight Group's got a very strong and growing reputation in that area. It's a manager that is very committed to that sector and is quite entrepreneurial through some of the sectors that it's looking at, and also growing through organically and through acquisitions as well. So they've got a clear plan that they want to develop in that area. And I really liked the team when I was speaking with them, and they were looking for somebody to come in and help them take the Foresight Solar Fund to the next stage, really. And part of that is I have a lot of belief in this area and this sector, and want to be a part of that.
Yeah, so in a very challenging time and exciting times to join. I mean, come this year, and we are hearing. I mean, we're seeing inflation, which is supposed to be, going for longer and will be going for longer than previously expected. And the power prices are at high levels and are not, going down anytime soon from where I can see. But also we are feeling the heat. And, metaphorically speaking, and when we walk out in the street, there's lots of sun in the UK and heat waves. I mean, you work in the solar company, so you can tell us all about it, and whether it's linked anyhow to the high power prices as well. I mean, what do you think within the company, and what's your view where it is all going?
I think in terms of these high power prices, I think people were expecting there would be a bit of a surge in power prices coming out of the pandemic, obviously, because power prices I think we're now forgetting that 18 months ago, power prices or 12 to 18 months ago, power prices were at the floor because there wasn't enough industrial action going on. So the recovery was expected. But even at the time that I joined, say October last year, I don't think anybody could have predicted the events following the invasion of Ukraine, the shortage of gas supply out there, to actually push it to these kind of levels. So I don't think anybody was seriously predicting that we'd be in this position. And it is a challenge with with inflation as well, running at sort of the highest level it's been for 40 years. It's a challenge. I don't think, like I say, that anybody, the renewables and solar and technologies like that are actually there and will help decrease energy prices over time. The challenge that we've got is it is still the gas price as the marginal cost that is setting the power price at the moment. And therefore, even though, like here in the UK, we aren't as reliant on the gas from Russia and other places as others, the market is connected, and therefore it is driving costs across the whole of Europe.
So when do you see that turning point, tipping point, when the prices move away from the gas prices?
I think there's two things here. There's going to be the power prices have gone up incredibly high. There's a short-term thing here in terms of that clearly governments across Europe are looking at in terms of helping out consumers and customers with their bills that could end up very, very high this winter. And in many ways, I think let's hope that we're going to have a mild a mild winter after this very, very hot summer. However, I think the renewables themselves will, over time, what we need really is a greater deployment of renewables into the market that will then, it will tip towards that scale. And I think if you look at all of us, I say this not just for myself at Foresight Solar, but all the funds, we all look at similar sort of power prices and power curves. It's in our forecasts already that those power curves are going to drop the electricity price. But it's probably from the mid-2020s out to sort of 2030 by the time you sort of see critical mass on that. And from now until then, it's kind of difficult to predict because we've got some very highly inflated power prices and high inflation as well. And it's difficult to see, it's difficult to know exactly how that's going to come down over the next.
I see. So it's going to be quite a few years that energy companies and renewable companies as well are going to be enjoying quite high revenues and high revenues and profits. Having seen that, what the governments started reacting on higher prices and the high revenues and also profits that are due to come out of energy companies in the near future, in a few years actually to come. So the UK government, for example, recently introduced the windfall, so-called windfall tax, was around £5 billion, if I'm correct. On oil and energy companies. How is it going to affect the renewable sector and the sector overall?
Sure. In terms of generators, oil and gas, the renewables and other generators in general are a little bit different from oil and gas because what we tend to do is, as generators, we will be locking in on PPA contracts in advance.
PPA stands for
power purchase agreements. So we'll be forward selling the energy that we're producing over future years. And so for Foresight Solar, we can do that up to 4 years in advance. So we will have already pre-sold a lot of our electricity. Some of it we've kept back and we have been able to lock in at high prices. So to an extent we've benefited from this. But actually it becomes quite difficult with the arrangements to unpick who is benefiting from what. Because if we sold power at a 70 to 80 pounds a megawatt last summer, we would have felt we were doing quite well. But this year you look at the power prices of what they are now, and maybe not so much. So I think it's quite difficult to unpick that. And one of the things I think even Rishi Sunak, as the former Chancellor, had been looking at this and getting into it and realising how difficult it is to unpick that. I think in a way, what is the biggest enemy here is uncertainty, because it has been kind of a question mark left over the market. So it was never ruled out applying to the windfall tax to the renewable sector as well, to in a way seek to recoup some of these profits. But I see Liz Truss has ruled out now putting in additional windfall taxes. And I think the conversation has more moved towards the review of the electricity market arrangements. So this is an Ofgem-led initiative that was actually in place, set up for consultation, I think even before the events of the Russian invasion of Ukraine. It's out for consultation now, with taking questions through to October, but even that's not due to report back until sort of May next year.
So we'll find out in May whether the renewable companies are going to be anyhow affected by this tax?
I think this is you've got to separate what is Ofgem as the regulator putting forward what would be a sort of normal plan of business, which is really gearing up to how do we change the electricity markets to factor in more and more renewables and intermittent generation coming in. Whereas it's going to be very interesting to see what the take of the next Prime Minister is at the moment, because there is a more immediate challenge there, and whether they're going to do that through cutting VAT on fuel or temporarily suspending the green levies and things like that. It's going to be interesting to see what they aim to do in the immediate term.
Indeed. So we're going to invite you again in, say, 6 months-ish time
for,
to
for a recap on what's actually
to
happened.
comment on what's changed.
Yeah, I think we know in many ways that these electricity prices we're seeing at the moment are unsustainable. And no, they can't sustain in any period of time. They're going to hurt people's incomes and bills, which is why we've taken the time to actually fix out a lot of our positions for the next 4 years. So in many ways, what happens, even politically or with different reviews in renewable markets, is probably only likely to impact us several years in advance. When I think most of the forecasts are that power prices will be back down to a normal level anyway.
I see. Okay. On this optimistic note, we thank Rose Driver, who is the portfolio co-manager of Foresight Solar Fund, and we'll see you in a few months' time, Rose.